I know I keep talking about HYT and stuff. This particular chart we're looking at it, which I generated using Gemini, right, is basically tracking the last rights offering for CLM, right, from Cornerstone. And this is where you got to be cautious trying to track all the way to the expiration of the offering, thinking you're going to get a deep discount because you're in the middle of a pullback back in April of 2025. So it would have been much better looking at the market itself being pulled back and the fund CLM being heavily discounted during that time period to just dollar cost average along the course of the rights offering, expecting that you may not get a heavy discount at the expiration of the rights offering. And that's kind of what happened. If you look at this from the announcement date, April 10th, the market price for CLM was 748. By April 21st, the real dip occurred and it was down to 666. It began to recover during the course of the rights offering. The price started coming back up. By the expiration of that rights offering, the price had gone up to over $7, 732 by the expiration. And the issuance date, it was at 731. So from the announcement, you didn't get much of any discount really if you were in at 748, didn't buy the dip in April at the lows because you didn't want to DCA because you were waiting for the expiration of the offering. You really didn't get much of a premium to from the date of the announcement to the date of the expiration or the issuance date for the offering. So you look at that announcement date, it was at 748, and you look at the expiration year at 732. So not a huge discount, but if so, you got to understand the environment you're in too. You got to look at what's going on in the market. The market was pulling back, so during that time period, I want to wait for the expiration of the offering. I would just go ahead and start DCAing because you're in the middle of a cycle in the market where things are pulling back, so you're going to get a heavy discount in regards to that too. Plus the way the issuance worked, I guess, is they were at 112% of NAV at that time on the issuance instead of being at a heavier discount. And so you got to be kind of cautious during the offering. I think you got to look at whatever is going on in the macro environment and see what the overall market is doing. And back in April, you already had a heavy discount. So I would have just already began dipping. I wouldn't have gone all in at one time. I would just progressively buy as it dips. And that's what I'm doing currently because I don't know what the bottom's going to be with HYT. I really don't know if it's going to get heavily discounted by the expiration date, but I'm going to have dry gunpowder to buy it lower if it continues to dip during this time period. All right, guys, be cautious out there and just keep in mind that specific dates don't generally mean you're going to get a heavy discount to whatever the market price is. You got to see what's going on in the macro environment, the overall stock market, to see if you're in a downtrend during that time period too. So I just thought I'd mention that because a lot of people were chasing the CLM offering and they were waiting to get in probably closer to the expiration date of the offering, and they really ended up missing that bottom that occurred during April. All right, guys, take care. Bye.